Howdy there folks, and welcome into today's video, which we talk about Alibaba stock. Cloud is probably the most exciting business for Alibaba in the future. It's very similar to what happened with Amazon, where Amazon was building out their cloud business. Not a lot of people saw it, that he's instilled the culture so well that I feel like they'll do well into the future. Almost like what Steve Jobs did with Apple, okay? Many companies, it's hard to instill a culture like that. I feel like Steve Jobs did an amazing job with Apple on his return. He really understood that if this company's gonna last for the long term, I gotta instill a culture into this company. Jack Ma has done this 100% with Alibaba. Look at the cloud revenues, up 103% year over year. Are you flipping my flapjacks? They're flipping it correct. Oh my goodness, guys.
Why Baba stock will be my next meta stock. Amazon CEO just said, Alibaba Cloud has very strong AI capabilities like AWS. Warren Buffett said, the difference between successful people and really successful people is that really successful people say no to just about everything.
Come on, big head.
Yeah, I'm coming, man. Slow. Why are you going that fast?
Because we got a meeting with Gavin Belson.
If we all would have said no to financial education Jeremy and to tattooed chef, we would surely be more successful. On the other hand, successful people know how to take rejection well too. In 1999, Larry Page and Sergey Brin wanted to sell Google for $1 million. They were rejected by Excite. Then they considered selling Google for $750,000. They were rejected again.
I'll give you $600,000 for it. We have the reach and the resources to take what you have done and push it to the global level.
In 2000, Netflix wanted to sell itself to Blockbuster for $50 million. They laughed at us, said Netflix co-founder Mark Randolph.
I'll give you $3 million for it right now. Okay, $4 million.
In early 2005, MySpace was interested in acquiring Facebook. Mark Zuckerberg asked for $75 million. MySpace felt the price was too high. What a shame.
I'm offering you $4 million right now.
That is a lot of money. You know, I've got to go to the bathroom. I've got to pee. I'm desperate. I'm bursting. I'll be right back, but right now...
Okay, $10 million.
No. Maybe. I didn't mean to snap at you.
Why I believe Alibaba stock is my next meta stock. Why Baba has bottomed and set up a new beginning. I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success. It is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you?
There was sort of a silver lining for Alibaba here as well, and maybe some of that is the reason that it's doing well in the market as well. Maybe it's not just Ant Group, because you're right, its rival, Amazon, AWS, its cloud business, which is a major player in China, so it competes with Alibaba in that market. We had Andy Jassy last night saying that, you know, the Chinese cloud providers are actually really good. And he said that their AI capabilities are sort of on par with the American ones. Have a listen to what he said.
There are some very strong cloud providers who are Chinese cloud providers in China. So Chinese companies in China are going to have access to AI capabilities, whether they come from US companies, European companies, or Chinese companies.
Sort of a big vote of confidence from the largest cloud player in the world. He's directly referencing Alibaba because it is the biggest Chinese player globally.
Let's be clear, the Baba stock's downtrend started with the canceled Ant IPO. The new uptrend will logically start with the end of the Ant crackdown, which happened on last Friday. Likely we have seen the bottom now, based on the chart as well as Michael Burry's buys. China ends Ant Group's regulatory revamp with nearly $1 billion of a fine. Chinese authorities announced on last Friday a 7.12 billion yuan, 984 million US dollars fine for Ant Group, ending a years-long regulatory overhaul of the fintech company and marking a key step to concluding a crackdown on the country's internet sector. Ant said it had completed its rectification work. We will comply with the terms of the penalty in all earnestness and sincerity and continue to further enhance our compliance governance. The Chinese authorities intended to unveil its fine on Ant as early as last Friday. Most of the prominent problems for platform companies' financial businesses have been rectified, said PBOC, adding that the financial regulators would next shift focus from focusing on specific companies to overall regulation of the industry. Alibaba shares jumped. U.S. listed shares in Ant's affiliate, e-commerce titan Alibaba Group, rose 9% after the PBOC's announcement. Ant's penalty paves the way for the fintech firm to secure a financial holding company license, seek growth, and eventually revive its plan for a stock market debut. The National Financial Regulatory Administration, a new government body under the State Council, is now the primary regulator to grant Ant the key license. For the broader technology sector, the fine marks a key step towards the conclusion of China's bruising crackdown on private enterprises, which began with the scraping of Ant's IPO in late 2020 and has subsequently wiped hundreds of billions off the market value of Alibaba. Moves by the Chinese government to finalize penalties, clarify its expectations, and draw clear compliance boundaries are key to stabilizing private sector confidence. Founded by billionaire Jack Ma, Ant operates China's ubiquitous mobile payment app Alipay and undertakes consumer lending and insurance products, distribution, among other businesses. In mid-2020, before its IPO was pulled, it was valued by some investors at more than $300 billion. Since April 2021, Ant has been formally undergoing a sweeping business restructuring, which includes turning itself into a financial holding company that would subject to its rules and capital requirements similar to those for banks. Alipay Plus is now going international. Ant's tech services business is also very well positioned for B2B contract and would have a fantastic growth path going forward now as its regulatory issues, which mainly impacted its domestic payment and credit businesses, were resolved. Ant's penalty comes at a time when Chinese authorities are keen to boost private sector confidence as the $17 trillion economy struggles to recover despite the lifting of lockdown earlier this year. It also follows the return to China of Ma earlier this year after spending many months overseas. Ma, who also founded Alibaba, withdrew from public view in late 2020 after giving a speech criticizing China's regulatory system, an event widely regarded as a trigger for the crackdown on industry. He previously owned more than 50% of the voting rights at Ant, but in January it said he would give up control of the company as part of the revamp. Alibaba, which spun off Ant 12 years ago and has a 33% stake, on Sunday said it was considering whether to participate in the buyback that would transfer shares to an employee incentive scheme. Ant said on Saturday that it proposed to repurchase up to 7.6% of its equity interest at a price representing a valuation of about $78.5 billion. That compared with $315 billion valuation in 2020 for what was set to be the world's largest IPO. Had it not been derailed at the last minute by Chinese regulators. The true motive behind Baba's 1-to-6 restructuring is not merely to release of shareholder value as portrayed by its management, but rather a strategic focus on its core business and safeguarding its market position. From fiscal year 2016 to fiscal year 2023, Baba grew revenue at 36% CAGR. However, during fiscal year 21 and fiscal year 22 and fiscal year 23, Baba's revenue growth rate went from 41% to 19% to 2%. What happened? Baba's core business, China's commerce segment that accounted for 67% of its revenue and 125% of adjusted EBITDA in fiscal year 23, started to face intense competition from and lose market share to firms such as PDD, JD, Douyin, etc. Additionally, Baba continues to face fierce competition in its other segments, and as a result, its revenue growth rates of all its other segments has significantly reduced and turned negative in some. With the declining growth rate, Baba's management realized that number one, they are facing moat-breaching threats on its Chinese commerce business. Merchant, non-exclusivity, competition, etc. Number two, in order to reverse the trend in number one, they must reinvest greater proportion of China commerce profits internally. Number three, the remaining 5 Baba segments lack scale and profits, face intense competition, require resources for expansion. Without them, their market shares or profits will further decline, and China commerce profits alone cannot fully fund their growth. So how could Baba address the aforementioned problems 1, 2, and 3 while simultaneously satisfying the concerns of both shareholders and the Chinese government? Baba restructured such that each segment got its own management and board. Other segments could seek external versus internal capital via IPOs for their growth. China commerce profits can be reinvested to drive its own versus other segments. Growth address government or shareholder concerns through spin-offs. The question now becomes, is this restructuring good for Baba? In my humble opinion, this could be good for Baba because it provides an opportunity for it too. Number 1, focus on repairing the moat of its core. China commerce business, which has high ROCE and runway to reinvest capital at high returns. Number 2, transition to a holding company structure and leadership from an accountant to a capital allocator. Number 3, divest non-core, value destructive, and low quality businesses. Although Chinese economy is in deflation right now, that is perfect for the recovery of the Chinese big tech Baba. It just got a new buy rating from Morgan Stanley and price target at $150 a share. And my book, Treasures Within Our Heart. You are such a good boy for watching my video right till the end. Bye.